the cards are stacked against him, and that market participants, like our witnesses, hide the ball. Mr. Teneve, you explained that Robinhood restricted transactions in certain securities to meet demands coming from your clearinghouse. And yet, on January 28th, you represented to the media that there was no liquidity problem. Isn't it true that being concerned about having enough capital to meet deposit requirements, isn't that a liquidity problem? Could you just answer yes or no?
Chairwoman Waters, I appreciate the opportunity to address that.
Just yes or no?
We always felt comfortable with our liquidity and the additional capital that Robinhood raised.
Please answer yes or no.
We always felt comfortable with our liquidity.
I don't have time. I just need a yes or no answer.
I stand by my statement. The additional capital we raised wasn't to meet capital requirements or deposit requirements.
Gentlemen,
excuse me.
I'm reclaiming my time. This liquidity problem had real consequences for your customers, but I wonder if they were all that surprised. Between December 2019 and December 2020, Robinhood customers experienced monetary losses due to system outages. Customer accounts were reportedly compromised. The firm repeatedly failed to testify its best execution obligations, and it misled its customers regarding its revenue sources. It seems retail investors often get a bad deal at Robinhood. Mr. Teneve, also, while you testified today that, quote, Robinhood's customers benefit greatly from payment for order flow, quote unquote, in December 2020, the SEC charged Robinhood for not disclosing that it was getting paid to send customer trades to Citadel Securities and other market makers, and for not seeking the best terms for its customers' orders. Robinhood provided such inferior trade prices, it cost your customers over $34 million. Is your testimony after Robinhood paid, is it your testimony after Robinhood paid the SEC $65 million to settle those charges, that this conflict of interest is in your customers' best interest? Yes or no?
Chairwoman Waters, first let me say regulatory compliance is at the center of everything that we do. We've made mistakes in the past. I'm not claiming that.
Answer yes or no to that question.
So Citadel Securities is an important counterparty. Nobody's denying that. The reason that—
Gentlemen, can I answer yes or no? I'm reclaiming my time. Meanwhile, Mr. Griffin, Citadel's role in this event also raises significant questions for policymakers. Citadel Securities pays Robinhood tens of millions of dollars to process trades by Robinhood's customers. This relationship gives Citadel Enterprise key non-public information as to direction and volume of trades by retail investors. Your firm makes use of private exchanges called dark pools and other off-exchange trading to trade large sizes without moving the market against you. In fact, at some point last month, 50% of all trades occurred in dark pools or via OTC off-exchange trades. Your business strategy is designed intentionally to undermine market transparency and skim profits from companies and other investors. One problem, though, Mr. Griffin, is that we don't really know how central your firm has become to the capital markets. Mr. Griffin, does Citadel handle 47% of the U.S. listed retail volume? Please, yes or no.
Excuse me, Chairman Waters, what percentage? I couldn't hear that number.
47%.
So, Chairman Waters, to the best
yes
of my knowledge, so the best of my knowledge, we handle in excess of roughly 40% of all retail volume.
Thank you very much for reclaiming my time. Mr. Griffin, on January 27, did Citadel execute 7.4 billion shares for retail investors, which would be more trades than the average daily volume of the entire United States equities market in 2019? Yes or no?
Chairman Waters, that was my written and oral testimony.
Thank you very much. And with that, I now recognize the distinguished ranking member, Mr. McHenry, for 5 minutes for questions.
All right, thank you. Mr. Tanev, I'm going to come to you first. I just want to get to what happened on that day in January. So let's take a step back here. You get a call in the middle of the night, according to what I've heard you in interviews say. And based off that conversation with your compliance team, you decided to halt the buying of GameStop stock. People were furious. We'll get into the regulations and the settlement parts of that today. We will get to that. But this is what I think needs to be answered about your decision. Why did Robinhood restrict the buying but not the selling of GameStop? And why did folks get locked out on the buy side only?
Ranking Member McHenry, I appreciate the opportunity to address that. The reason that Robinhood, first of all, let me say Robinhood is always committed to providing access. It's in our name. It's in everything that we do. The decision to restrict GameStop and other securities was driven purely by deposit and collateral requirements imposed by our clearinghouses. So buying securities increases our collateral requirements. Selling does not. Moreover, preventing customers from selling is a very difficult and painful experience where customers are unable to access their money. So we don't want to impose that type of experience on our customers unless we have no other choice. And even though I recognize customers were very upset and disappointed that we had to do this, I imagine it would have been significantly worse if we prevented customers from selling.
Okay, so let me ask this question. Is payment for order flow legal?
Yes, payment for order flow is legal and regulated and a common industry.
And is this disclosed to those users of your app?
Yes, payment for order flow is disclosed in multiple places. And moreover, payment for order flow enables commission-free trading. And that's why it's become the industry standard model, as other brokerages have replicated our model and started offering commission-free trading to their customers as well.
Okay, so to that to this greater point of what happened that day and the model that you're using, let's be crystal clear. That decision you made to restrict the buying but not the selling of GameStop was based. What was it based on? Pressure from anyone on the witness panel here today?
Not at all. Zero pressure from anyone. It was a collateral depository requirement decision made by our Robinhood Securities president.
All right, so let me get into this other question. Let me get into this question. You want to democratize finance. You want to open up Wall Street to retail investors. You say that Robinhood's mission is to democratize finance for all. So let's talk about that. So yes or no, can a Robinhood customer invest in Robinhood, the company?
Robinhood's currently a private company, so that's not possible, no.
And so you mean to tell me that the people that use your platform, that make you a successful company, and I would say directly contribute to your company's exponential growth and success, they don't get the same access to equity shares as a Robinhood employee or your institutional investors. Is that correct?
Currently, that is correct, yes.
All right, Ms. Schultz, let me pivot to you. Why is that? Why is it that everyday investors on the Robinhood app, people that I would argue contributed to its success, can't invest in Robinhood itself?
The SEC limits a lot of investment in private companies to those folks that are known as accredited investors. And to become an accredited investor, you have to have meet a wealth test of earning at least $200,000 a year, or having a net worth of over $1 million. The vast majority of people in this country don't meet that standard and are unable to invest in most private companies.
Okay, so let me just clear this. Mr. Tanev, I don't blame you for the restriction you've put on your customers not being able to invest in equity. I'd like to have more opportunity to ask Mr. Gill his thoughts on this, but let me just say this. I don't fault you for the inequitable regulatory structure that DC has created, but I think we need to clear this up. Final thing, Madam Chair, I have for the record, I'd like to submit a letter from the DTCC, which is the clearing company, that was not on the panel today, and your staff has this letter
Such
already.
is the order.
All right, thank you all, and look forward to getting to the facts of the matter here
From
today.
other members, Ms. Maloney.
Thank you, Chairwoman Waters and Ranking Member McHenry for convening this hearing. I hope today's hearing sheds light on how our markets are working, or in many cases are not working, for smaller investors and ways we can fix that. The events of late January saw tremendous volatility and stock prices that were totally divorced from market fundamentals. The whole enterprise was viewed by some as a giant video game, trading stocks instead of properties and monopoly money. But it's not all fun and games, because people can lose their life savings, their hard-earned cash, and tragically, last summer we know of at least one suicide linked to potential trading losses. Beyond those possible losses, the actions of Robinhood and other trading platforms during the GameStop frenzy caused confusion, anger, and undermined investor confidence in the fundamental fairness of our capital markets. None of this is healthy for our markets or good for investors. What makes markets work fairly is when everyone knows the rules, and that the rules remain consistent and predictable and are enforced. But because of Robinhood's actions, too many customers did not get that predictability. Many retail investors woke up on January 28th to find that they could no longer buy and sell stocks the same way they could the days prior, and they were being treated differently than other market participants who could still buy and sell those same stocks. So I don't blame them for thinking that things were stacked against the little guy. Mr. Tenev, you stated in your testimony that Robinhood restricted trading for certain securities, including GameStop, in order to meet your financial requirements with your clearinghouse. But when I go to Robinhood's website and the blog post you initially released on January 28th, your financial requirements with your clearinghouse are not mentioned. You only mention market volatility. And when I review the Robinhood customer agreement, you don't include specifics on how and when you may decide to restrict trading, which you did. And you don't include any language or disclosures regarding your capital requirements. It only includes vague language that at any time and in its sole discretion, Robinhood can restrict trading. In other words, you seem to reserve the right to make up the rules as you go along. So I have two questions for you. First, do you think you owe your customers more disclosure and transparency than you gave them? And second, do you believe your lack of candor with your customers might have contributed to the wild speculation and confusion that resulted in the aftermath of your trading restrictions?
Congresswoman, I appreciate the question. So to answer the second question, look, I'm sorry for what happened. I apologize, and I'm not going to say that Robinhood did everything perfect and that we haven't made mistakes in the past. But what I commit to is making sure that we improve from this, we learn from it, and we don't make the same mistakes in the future. And Robinhood as an organization will learn from this and improve to make sure it doesn't happen again. And I'll make sure of that.
Well, I expect we will experience future events with increased volatility, and Robinhood's recent actions appeared arbitrary, which is why I don't blame customers for feeling treated unfairly. Your trading restrictions came out of the blue, and your communication was not clear. So my next question, Mr. Tenev, looking forward, what operational changes is Robinhood making to better respond to future market volatility, to improve transparency with your customers, and to ensure retail customers don't get the rug pulled out from under them at the last minute?
Thank you for that question, Congresswoman. We'll be committing to reviewing absolutely everything about this. But the $3.4 billion that we raised, I think, goes a long way to cushioning the firm from future market volatility and other similar black swan events. And I believe that even throughout this process, we improved our risk management processes and strengthened them so that the experience customers had on Friday of that week was much improved from Thursday.
Thank you.
We'll continue to learn and improve upon this.
Ms. Wagner, you're recognized for comments.
Thank you, Madam Chairwoman. I'd like to welcome our witnesses for testifying today to discuss the late January market volatility that took place, along with what I hope is a broader discussion on market functions and their effect on everyday investors. Since I was very first elected, I have advocated for America's Main Street investors and worked tirelessly to ensure that all Americans, especially those low and middle income savers, are given the investment choice, access, and affordability that they deserve. Retail investors are the strength of our stock market, and I have fought throughout my career for their best interests in the financial markets. And this hearing today is no different. The advances in financial technology that we've witnessed in the last decade have improved the way that Americans and our businesses perform financial activities. In just the past year, we have seen retail investors' market participation more than double. And I think this is great. I believe in the wisdom of the retail investor, and I will say I believe in the First Amendment too. This increase is attributed to Robinhood and other trading brokerages who are lowering account minimums, permitting fractional share trading, and implementing zero commission trading. It is critical that Congress focus on reducing barriers to market participation, which is rarely want to do, let me sadly say, and allowing Main Street Americans access to the financial instruments that can create long-term investment savings. All of these changes have given millions of Americans the ability to invest better for their families and their future. My hope is that the majority does not use this hearing as an excuse to once again add new federal regulatory burdens to an industry that is already heavily regulated, that will prevent people from participating in our capital markets. Letting existing regulations work is key, not burdening everyday investors with new and more costly barriers to entry. Mr. Tanev, it appears at the time your company did not have enough money to meet the collateral requirements for that level of trading by your customers. In your view, A, were collateral requirements from the DTCC unreasonably high? Was the amount of trading on your platform unforeseeable? Or was your company undercapitalized given its risk profile?
Thank you for the question, Congresswoman. So this event was a 5 sigma event, which is a 1 in 3.5 million event. To put that in context, there have only been tens of thousands of stock market days in the history of the US stock market. So a 1 in 3.5 million event basically is unmodelable. That said, we can learn from it. And in this particular case, our risk management processes worked appropriately to keep us in compliance with all of our deposit requirements and collateral requirements.
Well, Mr. Tanev, I realize that you are doing a full review of your practices and such. I encourage you to do that. And certainly communication with your investors is going to be key to that, because you didn't communicate with them early on. Let me just say, as the ranking member on the Diversity and Inclusion Subcommittee, I am delighted to be speaking with our witness, Ms. Jennifer Schulp. Ranking Member McHenry and I have spent countless hours stressing the importance of having qualified women in finance. So I'm pleased to have you here today to lend your expertise. Ms. Schulp, we now know that it was the daily collateral demands set by the National Security Clearing Corporation that were the reason Robinhood had to temporarily restrict trading. Can you briefly explain the purpose of these capital requirements and their overall relationship to ensuring our markets function in an orderly manner? And did you see any broad failures of market function during these events, ma'am?
Sure, thank you. Thank you for the compliment. The NSCC's collateral requirements here serve the function to provide security for the stock settlement process goes through. So while an investor thinks that what has happened is they bought a stock on the day that they make a trade, it really takes 2 days for the settlement process to clear. During that time, the brokerage firm, the DTCC, and the brokerage firm on the other side can remain at risk of that stock not actually clearing. And the collateral requirements are in place in order to mitigate the risk that the brokerage firm will not be able to make good on its promises to sell or buy. I didn't see any broad scale failure here. The DTCC's collateral requirement was large, but understandable. And I think things functioned largely correctly.
My time has expired. I thank you all for your testimony, and I yield back, Madam Chairwoman.
Thank you very much.
Madam Chairman, point of order. I just like, yeah, Perlmutter, just to remind people to, when they're not speaking, to mute themselves, because there's a lot of feedback when the question is asked and the mic stays open and the people are answering the question. Just remind everybody, mute when you're not speaking, that's all.
Thank you very much. You heard Mr. Perlmutter. I would hope that every member would certainly do that. Mr. Sherman, you're recognized for 5 minutes.
Thank you very much. We've come to expect things on the internet to be free. When you're not paying for it, it's not free. You're the product, someone else is the customer. When you go onto Facebook and it's free, you're the product being sold to the advertiser, and your information is sold to God knows whom. So we now have a system where we're telling investors that it's free to invest to buy and sell stock. There are 2 ways to pay the folks involved in Wall Street for buying and selling stock. One is a commission, and you know what it is. And so we discourage investors a little bit from buying and selling stock because they have to pay a commission and they know they're paying a commission. The other way to do it is to give them a worse execution. Whenever there's a stock being purchased and sold, the market maker, perhaps Citadel, might be willing to sell the stock for $10.05, but will buy it for only $10. The difference is 5 cents. And so the issue is whether Robinhood and other people who are being told you get it for free are really getting it for free. Mr. Griffin, you're a market maker. You pay some brokers for order flow. You don't pay others for order flow. So when you pay for order flow, you're not making as much on the transaction. You have to pay some of that back to the broker. That's hidden the amount of that is hidden from the customer. The fact that it exists has perhaps recently been disclosed. SEC rules require that people get the best execution, but I've recently learned that there's best execution and enhanced pricing. So if you get an order from Fidelity and you get an order from Robinhood and you're paying for the Robinhood order flow, is the Robinhood customer getting as good a price as the Fidelity customer? Mr. Griffin.
So Congressman, I believe that's an excellent question. The execution quality that we can provide as measured in terms of price improvement is heavily related or correlated to the size of the order that we receive. So if I were to speculate,
don't tell me that that there are other factors involved and take us down another road. I'm asking you a clear question. assuming same size of order. One comes in from Robinhood, one comes in from Fidelity. Is it not true that one is going to get a enhanced best execution, and the other one is just going to get best execution?
So as I was trying to explain, because the Robinhood order comes from a community of traders who tend to trade in smaller size.
That isn't my question, sir. You're evading my question by making up other questions. Let me repeat. 2 identical orders come in. Same stock, same quantity. One's from Robinhood, one's from Fidelity. What happens?
The quality of the execution varies by the channel of the order. This is a commonly understood phenomena in economics that channels matter. So for example, when you go get a mortgage from JP Morgan to their clientele has a different rate of interest than a mortgage.
Okay, let me reclaiming my time, sir. Who gets the better deal? The one that comes from a broker who is being paid for order flow, and one not. Can you testify that on balance, there is no difference, assuming the same size of the order?
So as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate. Everyone else I've talked to in this industry says when you pay for order flow, you get when your broker is being paid for order flow, you get a worse execution. Otherwise, you're in a peculiar circumstance where you're making more money on a Fidelity transaction than a Robinhood transaction, which would be an absurd business practice.
The gentleman's time has expired. Mr. Lucas, you're recognized for 5 minutes.
Thank you, Madam Chairman, for holding this hearing, and thank you to the witnesses for agreeing to testify. It's been reported that approximately 20% of market volume is now attributable to retail customers, which I think is just fascinating considering that's up from 10% in 2019. And that's an overwhelmingly positive development, allowing for more market liquidity, more stability, additional avenues for households to grow their wealth. And it's important to increase market access for retail customers. And I don't want to disrupt that if we possibly can. So I'd like to turn with my first question to Mr. Teniff. Let's talk about the attention that this pay for order flow has received. You explained in your testimony, Robinhood's relationship with market makers is important for Robinhood's ability to offer commission-free trading. So expand, if you would, on how that process benefits the everyday investor. And just expand in general on that, if you would.
Congressman, I'd be happy to. Thanks for giving me an opportunity. So as I mentioned in my written testimony, payment for order flow enables commission-free trading. Prior to Robinhood changing the industry standard model to be commission-free, most brokers collected a commission on top of the payment for order flow on every transaction. Now, Robinhood routes to market makers, including Citadel Execution Services. We've got 7 in total across equities and options. And we route without consideration for payment for order flow. All payment for order flow arrangements are uniform across the market makers. And our system routes orders based on who provides the best execution quality for our customers. So the reason Citadel gets a relatively high percentage of our customer order flow is because they provide superior execution quality for our customers. And that's first and foremost the most important consideration that we look for. How are our customers getting the best execution quality? If another market maker were to improve upon the execution quality that Citadel Execution Services provides on any subset of orders, our system is set up to automatically route more traffic to that market maker.
Continuing down this line, because clearly this is one of the things that my colleagues and the public has a very strong interest in. And having lived through Dodd-Frank before, I see where sometimes major things can occur. I want to turn to Mr. Griffin. Now, could you also elaborate on how payment for order flow provides, whether it's the best price to the retail investor from the market maker perspective. Could you expand on that?
Congressman,
As you outlined in.
Absolutely, Congressman. So as the CEO of Robinhood just set forth clearly, the orders that are allocated amongst the market makers today are allocated principally on the basis of price improvement. We have fought for 15 years to make that the basis by how which orders are allocated, because we strongly believe that Citadel is able to provide a better execution for retail orders in the long run. We make a huge investment in our team and our technology to do so. How is it that we are able to provide better execution quality than exchanges? Because exchanges are limited in their ability to do business by regulatory mandate. Exchanges by law have a minimum 1 cent wide market, which for low price securities means that they are less competitive than they otherwise could be. We're able to
So are you here and what are you doing?
Excuse me?
That wasn't either one of us. Continue, Mr. Griffin.
All right. So we're able to share our trading acumen with retail investors, and we're able to give them a better price, and we're able to make payments for order flow to firms like Robinhood that allow them to have lower, or today in most cases, no commission. And of particular note, we're able to help Robinhood and other brokers pay exchange fees to the exchanges at the time of execution. This has been very important to the democratization of finance. It has allowed the American retail investor to have the lowest execution cost they've ever had in the history of the U.S. financial market.
Kind of in the Dodd-Frank process that the chairman and I went through a decade ago, plus there was much discussion about margin requirements. Give us just a discussion for an instant about when you discovered you had a $3 billion additional margin call.
So, thank you, Congressman. I believe the full play-by-play of that situation was described in detail in my written testimony. Just to clarify, though, this decision had nothing to do with margin.
Expired, unfortunately. Thank you, Madam Chair. I yield back.
Has expired. Mr. Meeks, you're recognized for 5 minutes.
Thank you, Madam Chair, for this hearing, and Mr. Ranking Member. Let me ask a question to Mr. Taneve. I've been burnt once or twice in the market, and but particularly since I've been a member of Congress, one of the things that I recall greatly was the financial crises in 2008. And it is, we thought that opening the market up, where people had adjustable rate mortgages, et cetera, they were able to get into the market, people who may not have been before, but a lot of disclosure had not happened. So they didn't look, nor was there was no documents to look at what their incomes were or anything of that nature. So when those adjustable rates happened, many individuals lost their homes. Many people who bought those mortgages or who initially agreed to those mortgages sold them immediately because they did know that the people would not be able to afford them and they would default shortly thereafter. Now, so I understand your model of trying to get more people, more democratization, but that means that there's now greater responsibility of ensuring that your customers have all of the information they need to assess riskier trades. Now, for me, the information that has to be digestible and accessible. Now, one of the problems I have, for example, you're allowing up to $1,000 to buy stocks on margin, and borrowing on margin is risky. So how do you disclose this? How do you make determination of individuals who are not the sophisticated investors and allowing them to buy these risky stocks that are on margin?
Thank you, Congressman, for the opportunity to address that. Let me set the stage a little bit by saying that about 2% of our customers borrow on margin. About 13% on a monthly basis perform an options transaction, and a much smaller number, around 3%, perform a multi-leg options transaction. So the vast majority of our customers are engaging in buy and hold activities and long-term investing on our platform. Now, to clarify your point on the $1,000 margin, that's actually something that we refer to as Robinhood Instant, and it's provided as a courtesy. When a customer initiates a deposit, we allow them access to up to $1,000 of that deposit immediately, similar to how if you deposit a check at a bank, as a courtesy, they might provide access to those funds or a portion of them before that check clears. As for margin specifically, borrowing money on margin, the rules are very ironclad industry-wide. Obviously, Robinhood Securities conforms to all of the applicable rules. And Robinhood's product is in many ways more restrictive than that of our competitors, because in order to even qualify for borrowing on margin, you have to be a Robinhood Gold customer, which involves paying $5 a month for the service.
So I think that you have, you say that everything is restrictive, but when you are going after the less sophisticated investor, it's more than that. There's a greater responsibility that you have, because they have, they could lose. And when they lose, it could make a determination of whether or not they can pay their mortgage or their rent or not. And they can be taken advantage of. Oftentimes we find in the financial industry, it is those that have the least that are really taken advantage of. So the big guys, it becomes a reverse Robin Hood situation, which really concerns me. Let me get to this real quick, because I was just something else that you said in regards to liquidity. And you said that you didn't borrow the money because you needed it at the time, but that then you later in a question you asked that you raised the additional money, because I want to know how you spent the money for future situations, which means to me that you did have a liquidity problem, or you anticipated possibly having a liquidity problem, or would have one in future transactions. Could you? What's the deal there?
I appreciate that question. I stand by what I said. Robinhood was able to meet our deposit requirements. We were in compliance with firm net capital obligations throughout the period. And that additional capital, the $3.4 billion, wasn't to service our requirements. It was entirely to prepare for a future, even greater black swan event, and to unrestrict and remove restrictions on the trading and buying of these securities.
The gentleman's time has expired. Mr. Huizenga, you're next with 5 minutes.
Thanks, Madam Chair. And this would have been a little nicer 10 minutes ago when I was supposed to go, but I'm going to go back to Mr. Griffin and the chair of the Capital Markets Subcommittee. Ranking member, I think, was filibustering himself. And I just wanted to make sure, Mr. Griffin, you had that opportunity to feel comfortable with the explanation of that best execution and what was attempted apparently to try to be asked.
Congressman, I hope so. I think it's important to emphasize that we have vigorously advocated for execution quality to be one of the dominant decision-making factors in the routing of order flow in the United States. This has saved retail investors billions of dollars over the year, in contrast to the executions that they would receive through other execution strategies.
Okay.
With respect to payment for order flow, we simply play by the rules of the road. Payment for order flow has been expressly approved by the SEC. It is a customary practice within the industry. If they choose to change the rules of the road, we need to drive on the left side versus the right side. That's fine with us. I do believe that payment for order flow has been an important source of innovation in the industry. As the CEO of Robinhood has testified, they drove the industry towards $0 commissions. This has been a big win for American investors.
We get to Ms. Sculp from Cato Institute. And I know that there was Greenwich Associates had a study, and others are out there. Do you concur that this has been good for consumers in the most part?
I think that there's still ongoing studies, but I do think that payment for order flow and the price improvements have largely been good for improvements for customers. And I agree with Mr. Griffin that this has helped drive innovation in the industry. I think disclosure can always be better, and I think people should understand that their broker still needs to make money even if they're providing a zero commission trading service.
Yeah. Okay. All right. I've got about 3 minutes left. I was going to start actually with this and ask each one of you why you thought you were here today. But I'm going to dispense with that because it's going to take too much time, and I'll provide the answer. Political theater for the most part. That's what this hearing is today. I mean, we're on the business channels right now and on C-SPAN. I think if you see a few of my colleagues playing to the cameras, but we need to have some of these fundamental and important questions answered at the end of the day. And one of the assertions that you've heard already today is that investing is, quote, casino gambling. It's using monopoly funny money. I guess I want to know, is individual retail participation in the marketplace gambling, casino gambling, or using funny money? Mr. Gill, why don't we just start with you? Very quickly. I don't hear him. Mr. Huffman, let's move to you.
No, I believe that investing is investing.
Okay. Mr. Griffin?
I believe the vast majority of retail participation are people saving to meet their dreams.
All right. Mr. Tenev?
Congressman, thank you. As I mentioned in my opening statement, Robinhood customers have essentially made over $35 billion in unrealized and realized gains on all of their assets.
It's thing for them, correct?
Absolutely, it's investing and it's building wealth.
Go back to Mr. Gill.
Yes, of course. I do. I believe it's an opportunity for investors to participate in the market just as institutionals participate.
Okay, so actually the business channels had a good question from one of the Reddit readers, which is, so you recommended GameStop before. Would you buy their stock now at roughly 45? It started at 48 earlier today. You were talking about buying it and being happy when it hit cross 20. So are you buying that stock today?
Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
So yes or no, are you buying the stock?
And for me personally, yes, I do find it's an attractive investment at this price point.
Quick question. Did you invest in GameStop because you were not aware of the payment for order flow? That's one of the accusations. People bought into this because they don't know that.
Sorry, could you repeat that question?
Did you buy GameStop because you were not aware of the payment for order flow?
My investment in GameStop was based on the fundamentals.
Okay. I think that answers it. I believe my time has expired.
Ms. Velasquez, you're recognized for 5 minutes.
Thank you, Chairwoman. Mr. Tenev, Robinhood seems to have perfected the gamification of trading, providing the user with the perception that investing through the Robinhood app offers recreational gain, playing with little or no downside risk. Of course, many of us understand that investing is not a game and carries significant risk. How does Robinhood balance disclosures around the potential downside risk of investing, including the risk of substantial loss and the more enticing claims of profitability and the ease of trading?
Congresswoman, I appreciate that question. Giving people what they want in a responsible way is what Robinhood is about. We don't consider that gamification. We know that investing is serious, and we're investing in all of the educational tools and customer support to help people on their investing journey. what we see is most of our customers are buy and hold. A very small percentage are trading options, about 13%, and less than 3% borrow on margin. So most people use Robinhood to build up portfolios over time. And
but can you answer my question? How do you balance disclosures around the potential downside risk of?
So we make lots of disclosures, Congresswoman. We also we're also a self-directed brokerage, so that means we don't provide advice and we don't make recommendations for what customers should or should not invest in.
So you don't think that as a result of the emphasizing profitability and ease of trading over the risk of loss, that many amateur investors were unaware of the situation they currently find themselves in?
Well, I want to mention again, as in my opening statement, Robinhood customers have earned more than $35 billion in unrealized and realized gains on top of what they've deposited. So I think this shows us that the product is working for customers and our mission is working.
Okay, thank you. Mr. Plotkin, over the course of my time in Congress, I have been concerned and spoken out about the dangers of short selling. While I understand that short selling can be used for legitimate purposes, too often I have seen abuse, and it ends up harming ordinary workers and families. I first saw it against the people of Puerto Rico, and now we are seeing it here against GameStop. Large investors, including hedge funds like yours, have to disclose their long positions when they own 5% or more of the company's shares, but not such disclosure is required for short positions. As we consider reforms, is this type of disclosure for short positions something you will support? Mr. Plotkin?
Yeah, Congresswoman, thank you very much for the question. I think it's a really good question. Whatever regulation is put forth in the marketplace, we will obviously, operate within those rules. It's certainly something I'd be happy to follow up with.
But what about my question about short selling?
Yeah, I think it's a really good question. It's not really for me to decide, but if those are the rules, I'll certainly abide by them.
Okay, well, I'm glad to hear that answer. Mr. Gill, public reports credit you with helping to start the GameStop craze by encouraging other amateur investors to bet against the short positions that Mr. Plotkin and others took. But the stock has now fallen from its high, and many amateur investors have lost hundreds of thousands of dollars. It is my understanding that you are a registered broker. Is that correct?
The gentle lady's time has expired.
Okay. Thank you. I yield back.
Thank you, and I appreciate all of the members who are participating today. This is not political theater at all. This is serious oversight responsibility, and members are reminded not to impugn the motive of other members. Thank you. Mr. Lukemeyer, you're recognized for 5 minutes.
Thank you, Madam Chair. And my first question will go to Mr. Gill. Mr. Gill, I guess the question is, you're a very serious investor, somebody who does his homework, invest in the market, your own personal funds. And so I guess the question would be, here today, we're discussing the actions around Robinhood, all the transactions that took place. And I guess, do you think we need more legislation as a result of what happened here, or did the system actually work? And let me just make a couple comments on that part. From the standpoint that, did it work? Was it self-correcting? Did the fact that somebody like yourself was able to invest and maybe take advantage of the overshorting positions by the hedge fund guys who were trying to really drive down the price of the stock for other reasons, whatever? Or did it point out perhaps that we had some companies, perhaps like Robinhood, I would argue that was undercapitalized or under-reserved? Or maybe there was over-aggressive other types of investing that was taking place. The algorithms that were there, the different business models, they didn't work because you outsmarted the system, so to speak. Would you like to comment on that, on that sort of questions and how I formatted that?
Thank you for the question, Congressman. I would say my expertise is in analyzing the business, the fundamentals of the business, not so much on the inner workings of the market. I'm not so sure about legislation per se. What I would say is that increased transparency could help. That if someone like me could have a better understanding of how those types of things work, I feel as though it would be quite beneficial to retail investors.
Thank you for that. I know that Mr. Tevin, Robinhood has an interesting name. As I recall, the old story is take from the rich, give to the poor. And I assume what you're doing is allowing the poor to compete with the rich, which is interesting. You made the comment in your testimony, Mr. Tevin, about settling this in real time. We have the electronic ability to do this. I think that would probably help the situation that occurred here. But what other problems occur when you do this in real time? What other things would we have to look at? What other unintended consequences would there be if you did something like that?
Thank you, Congressman, for the question. I believe that right now, certain market participants rely on next day settlement to be able to take advantage of intraday netting and run up larger one-sided positions in certain stocks with the knowledge that they can close those positions or reduce them by the time settlement happens. And I understand that would be a limitation to the trading activities of some of these institutions. So that's certainly one area to consider. The other is around securities lending. We'd have to make changes to how securities lending works. I don't think any of these are insurmountable challenges, and I'd be happy, as I mentioned earlier, to deploy our intellectual capital and our team's engineering resources to help solve these problems very quickly.
Thank you for that. Mr. Plotkin and Mr. Griffin, the question is for both of you here. Whenever you're short selling, I understand that GameStop stock was short sold 140%. And Mr. Plotkin, you made the comment in your testimony a minute ago that you were not trying to manipulate stock. Yet if you're short selling a stock 140%, for me, on the outside looking in, it looks like that's exactly what you're doing. Explain to me why that's not manipulating a stock.
Thank you, Congressman. For us, I can't speak to other people that were shorted. Anytime we short a stock, we locate a borrow. Our systems actually force us to find a borrower. So we always, short stocks within the context of all the rules.
Mr. Griffin, would you like to comment on that? You guys are both market makers and brokers and hedge fund guys. I mean, you do all of it. Why is this not considered manipulating a stock whenever you can short sell at 140%? Don't you think there should be a limit on something like that?
So I believe that the short interest in GameStop was exceptional. And I'm not sure it's worth us delving into legislative corrections for a very unique situation in terms of the extreme size of the short interest. I will say that all of the large market participants, in fact, every bank, every hedge fund does have to comply with the requirement to borrow shares to short shares in the course of their day in and day out business. The practice of naked shorting was largely curtailed by SEC mandate years ago.
The gentleman's time has expired. Mr. Scott, you're recognized for 5 minutes.
Thank you, Chair Lady Waters. And let me just say, Chair Lady, that the people of this country appreciate you for pulling this financial services hearing together, because this is a threat to the future of our financial system, and we got to get to the bottom of it. Let me start with you, Mr. Tenney. Let's go through this. The sequence of events that led to the extreme rise in value of GameStop stock and the subsequent market volatility originated through a Reddit discussion. And then that was fueled through social media. And as the story gained traction, tweets by well-known figures with the influence to move markets sent the stock value even higher and higher. So let me start with you, Mr. Tenney. What policies does Robinhood have in place to monitor what happened on social media and how it drives the use of your trading platforms?
Thank you for the question, Congressman. Currently, Robinhood does not perform any sort of moderation of social media. We simply don't have the data that the social media platforms have at their disposal to tie these posts to identities. We do, however, within Robinhood Securities, conform to all regulatory requirements around monitoring and trade surveillance and all things of that nature.
Well, Mr. Kennedy, don't you see something is going terribly wrong here? What do you do to monitor the trades in individual stocks, particularly when, in the case of GameStop, they are singled out and moved on social media? What do you do?
I appreciate the question. So our priority throughout the exceptional market conditions in January and early February was to maintain the uptime and performance of our platform and make sure that we're available to customers.
Let me try to get to a point here. Do you, Robinhood, do you have any policies in place to ensure that investors are making trades based on legitimate material, financial information, and not the influence of social media, the design of trading platforms, or any other superfluous information? Do you have anything, any guard to that?
Absolutely. Congressman, we provide educational resources to our customers, including our redesigned Robinhood Learn portal, which is not just available to Robinhood customers, but to the general public, and had over 3.2 million people visiting in 2020.
But do we not, I mean, you're at the center of this. Don't you see and agree that something very wrong happened here and that you're at the center of it? And we are looking on this committee of how we can protect our wonderful, precious financial system. We need it from you. What about you, Mr. Hoffman? Do you have anything? What steps is your company taking to guard against this? Anything at all?
Congressman, we spend a lot of time at Reddit ensuring the authenticity of our platform. So we've got a large team dedicated to this exact task. Everything on Reddit, all of the content is created by users, voted on by users, and ranked by users. And we make sure that that is authentic and as unmanipulated as possible. And in this specific case, we did not see any signs of manipulation.
Madam Chairman, lady, I just want to conclude. I got maybe 10 seconds left, but this episode exposes a serious threat to our financial system when tweets, social media posts do more to move the market than material, legitimate information. The risk is enormous.
Thank you very much. Mr. Stivers, you now have 5 minutes.
Thank you, Madam Chair. I appreciate you calling this hearing. The American financial markets, I believe, are the envy of the world, but they're still imperfect. I would have liked to seen this committee have a meaningful discussion about capital requirements and the T+2 clearing rules that may have contributed to some of Robinhood's customers not being able to purchase stock, including GameStop, for a period of time. But because the majority didn't include the SEC, the Depository Trust Clearing Corporation, or the National Securities Clearing Corporation to testify, we're left with what we have. That's because I believe the majority is attempting to use this hearing to drive a narrative about the U.S. capital markets being rigged. But I do have several questions. Mr. Tanev, you decided to stop allowing your users to buy GameStop and other stocks as a result of capital requirements on Robinhood Securities. Is that correct?
That's correct, yes. Deposit requirements with our clearing houses.
And you know, those got resolved, but for a period of time, some of your users could only sell and not buy, and that could have contributed to the stock actually going, you know, not going up as fast because some of your users were prohibited from buying. Do you think that is possible that could have happened?
I shouldn't speculate on what could have happened if
there's more sellers than buyers, does the stock price go down or up?
Well, to be clear, Robinhood, Congressman, is a minority of trading activity in these securities.
I understand, but if your buyers can only sell and not buy, then it clearly keeps you from putting upward pressure on the stock price. Is that correct?
On Thursday, customers on our platform could only sell, so there was no ability to buy. That's correct.
Great. So, you know, I know, and you said earlier, by the way, I know some people have attacked your arbitration agreements, but I want you to be clear. If your users were harmed as a result of these actions, they can recover through arbitration. Is that correct? Yes or no?
Yes, that's correct. And our arbitration is FINRA supervised and overseen. And we do believe arbitration gives customers a fair and speedier resolution to their claims.
Thank you. Does your user agreement and your arbitration allow for group arbitration or only individual arbitration?
Let me get back to you on that.
If a group was treated similarly and similarly affected or lost upside or lost money, can they do it as a group, or is it only individual in your arbitration agreement?
Well, Congressman, I'm sure you're familiar of the number of class action lawsuits filed against Robinhood.
And I'm not asking about a class action lawsuit. I'm asking, in your arbitration system, can a group of people come together, or is it individual? And this is not a trick question. I'm not a fan of trial lawyers. I'm just trying to understand.
Yeah, I appreciate the question, Congressman. I think the best thing I can do is get back to you after making sure that we get you the right answer.
Thank you. That'd be helpful. Mr. Plotkin, are you a frequent short seller, yes or no?
We run a long short portfolio. The majority of our investments are long investments, but we also have short investments to hedge out market risk.
Thank you, Mr. Plotkin. Has Melvin Capitol ever engaged in short selling of the stock Tesla?
We have been short Tesla in the past. That's correct.
Mr. Plotkin, also, this is a longer question. Did you see the tweet from Tesla CEO Elon Musk about GameStop stock?
I did see that after market hours on a Tuesday.
Do you believe that Mr. Musk's tweet had any significant effect of driving the rise in GameStop stock?
I don't want to speculate on what the actions of his tweet were. The stock did rise after hours.
This, then, do you believe that tweet was targeting you because you had shorted Tesla stock in the past?
We had a very small short position years ago in Tesla. That would be pure speculation as to his motives of putting that tweet out.
Okay. Thank you. I'll go back to Mr. Tanev on the regulatory requirements. Do you believe that the SEC and the Depository Trust Clearing Corporation should modify any of their rules as a result of what happened to your users because of capital requirements?
I do believe.
The gentleman's time has expired, and the SEC is not here today because they're in transition with a temporary chair awaiting the confirmation of the person who's been appointed by the President of the United States. This is a serious hearing. Members are reminded not to impugn the motives of others. Thank you, Mr. Green. You're recognized for 5 minutes.
Thank you, Madam Chair. Ms. Schultz, there is a reason for penalizing a market maker for improperly trading its own accounts ahead of its clients' accounts. Note that I said improperly trading. I don't want to go through the scenario of there being a time for proper trading ahead of accounts. I'd like for you to tell us what that reason is, please.
Well, trading ahead of customer accounts is illegal, and it does not.
I understand that it's illegal. I don't mean to be rude, crude, and unrefined, but I have to ask this question quickly. What can happen that can benefit the market maker? How can that be monetized such that the market maker profits greatly from doing it?
Right. If a market maker trades improperly ahead of the own customer accounts, he can get a better price and can move the market in the process depending on how big the trade is, thus hurting the customer.
Yes, and if this trade is huge, and you can see that this trade that the client has is huge and will have an impact on the market, how does that benefit the market maker to trade ahead of the client?
The market maker can get a better price for himself before the price changes by the client's trade. He can also engage in self-dealing that way as well.
So does it benefit a huge market maker to have a great deal with, let's say, a Robinhood because of the flow that will be coming through that the market maker can take advantage of?
I don't think that they're necessarily congruent situations. When you're trading ahead of a customer order, which is something that is illegal and that the SEC does monitor for, it's very different from having knowledge as to the way that the market might be moving based on.
I understand, but I want to talk about the circumstance where it's improper, not where it's proper. Remember, we started with improper trading. Here's my point. Let me go to it quickly. The market maker Citadel traded over-the-counter stocks for its own accounts in 2012, from 2012 to 2014, while simultaneously delaying client orders for the same shares. And it was fine for this. Citadel has been naughty for some time. 2014, Citadel faced $800,000 in penalties. 2017, 22.6 million. 2018, 3.5 million. 2020, 97 million. And another 2020 of 700,000. This seems like a lot of money. It is for me, more than $124 million. But over the same period of time, Citadel had revenues generated in the amount of $13.2 billion. It seems to me that the punishment for these improper trades and improper actions, because it wasn't just trading, Citadel also did some other things that were not proper. They misled clients. Seems that the punishment is so small given the amount of revenue generated over the same period of time. It seems that Citadel has at least an opportunity to build into its cost of doing business paying penalties. And that concerns me. It concerns me that the punishment doesn't seem to deter Citadel. It concerns me because I know of circumstances wherein persons who are not in the market, they do things that are much less harmful, and they can possibly go to jail. So the question that I have is this: what kinds of systems do we have in place? And it's back to you again, ma'am, to prevent the very things that I have called to the attention of my colleagues?
Well, as a former enforcement attorney at FINRA, I can say that regulators have the same concern with fines and other punishments becoming just a cost of doing business. And it's one of the things that are considered along with the regulations around what can be punished.
The gentleman's time
May I, for the record,
has expired. Mr. Green, as you know, we're going to have a series of hearings, and our next panel will include a whole bevy of experts also on some of these issues. With that, Mr. Barr, you're ready.
May I place something in the record, please? I have additional questions.
Without objection, you may enter into the record. Thank you.
Thank you.
Mr. Barr, you're recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Griffin, I want to revisit this issue of payment for order flow. Payment for order flow has been around for decades, correct?
So I know it's been around for at least 1 or 2 decades. I can't answer before that period of time.
And it's a recognized and approved practice by the SEC, correct?
Yes, it is.
And payment for order flow is set by the brokerage firm, not the wholesaler, right?
It is ultimately a negotiated number, but it is a number that is set by the brokerage firm and not by us as the market maker.
Well, as a market maker that provides execution services to retail brokers, you are required to meet best execution requirements. Is that correct?
Yes, it is.
And in other words, market makers are required to provide the same or better pricing than the exchanges, correct?
That is correct.
And how can market makers offer that better pricing to Mr. Sherman's line of questions?
So there are a number of drivers that permit us to offer better pricing than what is available on exchange. The first is that exchanges have legally mandated minimum tick sizes of a penny. So if you look at a stock like AMC, it trades $5 bid, 501 offered. If the exchange could trade with a half cent increment, it would probably trade $5.005 bid, 501 offered, or vice versa. But the exchanges are limited to a 1 cent minimum tick size. And we have been clear on the record in prior testimony that exchanges should be permitted to have a smaller and more competitive tick size. That's factor number one.
Okay.
Number two is that the average retail order is much smaller in totality than the average order that goes onto an exchange. Because this order is smaller, and I'll share a number with you, the typical Robinhood order is ballpark about $2,000 in size. Because it's a small order, the amount of risk that we need to assume in managing that order is relatively small as compared to an order that we have to manage from our on-exchange trading. And as I'm sure you're well aware, we are the largest trader of stocks on exchanges in the United States. So
let me move to Mr. Tenev really quickly on that point. What impact might greater restrictions on the payment for order flow model have on your ability to offer zero commission trades?
We do believe, Congressman, that that's an important question, and payment for order flow helps cover the costs of running our business and offer commission-free trading to customers. When we started, people didn't even think that there was enough margin left to make this business work, but we've been fortunate to make it work and to make it work for our customers.
Well, let's talk about why Robinhood restricted trades. I think your explanation about margin requirements charged by your clearinghouse makes sense. Is your clearinghouse supervised by the Fed and the SEC?
I believe that's
are the margin requirements charged by your clearinghouse in turn approved by federal regulators?
Yes.
And did federal regulators approve the value risk charge that was imposed on Robinhood?
I believe, Congressman, the value at risk charge is outlined in general terms in Dodd-Frank, but I'm not sure who approved the specific implementation of that formula.
So if anyone has a problem with your decision to halt trades, it's fair to say that their frustration should be directed toward federal regulation.
Congressman, you know, I'm not trying to throw anyone under the bus and direct frustration anywhere. All I can say is Robinhood Securities played this by the books and played it basically the only way that we could remain in compliance with our deposit requirements.
Mr. Plotkin, appreciate your testimony that Melvin always follows laws governing shorting stock, but Melvin lost $6 billion in 20 trading days. Let me ask you about your risk management. Did your short positions exceed float?
No, they did not.
Well, shorting has an important role to play in our markets, allowing for legitimate hedging and price discovery. But we are interested in naked shorting, and so we would hope that you would clarify that and how it is that you make sure that you're first locating the borrow.
My time has expired. Mr. Cleaver, you're recognized for 5 minutes.
Thank you, Madam Chair. And I too would like to thank you for this hearing. It's a question that a lot of people are asking, probably many of us as we go throughout our districts. But let me start with you, Mr. Tanae. I'm just curious if you can give it to me in a short period of time. How did you come up with your name for your company?
Absolutely. Thank you for that question, Congressman. Robinhood stands for lowering the barrier to entry and democratizing finance for all. So the idea is the same tools that institutions and wealthier high net worth individuals have had for a long time should be available to the people regardless of their net worth or how much money they have.
Okay, I appreciate that answer. Because it's something I would also embrace. However, I have a 23-year-old on the other side of the house who I love dearly, but he has no training, no income, no qualifications. How in the world could he get like $1 million worth of leverage?
Thank you, Congressman. So the leverage that we provide to our customers, which less than 3% of our customers actively use, is regulated strictly by requirements. So the only way to get that amount of leverage in a margin account through borrowing is to deposit a similarly sized amount of capital.
Or by mistake.
Congressman, I'm not sure what you're referring to.
Well, I mean, there's a record of a young man getting $1 million worth of leverage. He was only 20 years old. So I'm just saying, if that's not a policy, that was an error.
Congressman, I appreciate the opportunity to address that really important point. You're referring to Mr. Kearns.
I am.
The man who unfortunately passed last year.
Yes.
First of all, I'm sorry to the family of Mr. Kearns for your loss. The passing of Mr. Kearns was deeply troubling to me and to the entire company, and we have vowed to take a series of steps, very aggressive steps, to make our options product safer for our customers, including changing the customer interface, adding more additional options education, as well as strengthening and tightening the requirements for people getting options, and adding a live customer support line for acute options cases. So it was a tragedy, and we went into immediate action to make sure that we made not just the most accessible options trading product for our customers, but the safest as well.
Okay, I asked that question. In my real life, I'm a United Methodist pastor, and so I've read your statement. After the tragedy of this young 20-year-old. But I mean, and I don't think you nor I want to get in. I mean, to litigate that right here today. But you know, what improvements did you make in the aftermath to your platform, or were there improvements?
Thank you, Congressman. There were several improvements. One, we added the ability to instant exercise as well as exercise options positions in app. We clarified the display of buying power, specifically negative buying power, in situations where one leg of a complex multi-leg options transaction were to be assigned. We also added an options education specialist. We also added live phone-based customer support for acute options cases, which has gotten very, very great feedback from customers and is something we're expanding to other use cases, such as cases where customers' accounts have had off-platform hacking incidents.
Okay, that's the last one is where I was concentrating on, because you know, this young man was trying to get into your system to find out what was going on. He was confused. He was scared, and so he sent emails. And so you know, and to be fair, there was a response, but it was like, you know, hours later. And so as I became more and more familiar with this particular case.
The gentleman's time has expired.
Thank you, Madam. Thank you, Madam Chair. I appreciate it.
You're so welcome. Mr. Hill, you're recognized for 5 minutes.
Well, thank you, Madam Chair, for holding this hearing, and I want to thank our witnesses for their expertise and their patience. Madam Chair, I have a letter from the American Securities Association I'd like to insert in the record, please.
Without objection, such is the order.
Thank you very much. And Mr. Tenev, what a treat to see you, and congratulations on being part of the American dream. I had the pleasure working for President Bush 41, of working in Sofia in 1990 and 1991 to try to bring capitalism to Bulgaria after the wall fell. So I'm glad to see you're an American citizen and innovating here in our country.
Thank you.
I think you've done a good job talking about the I'd say the acknowledged lesson that you've learned in terms of these deposits for clearing and the important risk management issue for your firm. So I'd like to turn to follow up on some of the discussions about retail service that you've also touched on today. Do you have a call center generally for Robinhood investors?
Thank you for that question, Congressman. And I want to start by saying customer service is fundamental to everything that we do, and it's one of the areas where we're investing the most. We have customer service centers in a number of states: Colorado, Florida, Texas, and Arizona, and we're looking to expand aggressively.
Well, do you have a call center that I can call, a 1-800 number, if I'm having a trouble in the middle of the trading day?
We do offer, Congressman, live phone support in app for certain use cases. We're expanding that as fast as we can.
Yeah.
So as I mentioned earlier, options, advanced options cases, as well as account takeovers, which typically happen through a customer's personal email who's been compromised. And the feedback's been great, and we're looking to expand the live phone channel, as well as make improvements to our email channel and even upstream within the product.
Thank you. Thank you. That's helpful. And on the subject of margin and options, you've talked about that today. But, you know, I've spent 40 years in this business and been the general securities principal in 3 different firms. And this issue of granting margin and option approval to retail clients is always an important issue. You've addressed that today. So I want to turn to a different topic that has not been raised, and that's low dollar stocks. As I understand it, your policy and procedure manual simply said that you allow low dollar stocks if they're on an exchange, but many brokerage firms are very reticent to allow retail investors to invest in stocks that are under $5. Could you address that issue today?
Yes, I'd be happy to, Congressman. So Robinhood allows customers to trade in and invest in exchange listed securities. So that's the objective criteria that we use. And it actually excludes several types of securities that customers commonly request to trade in. So on Robinhood, you can't trade over-the-counter bulletin boards, except in limited cases where a listed stock falls to over-the-counter. You can't trade pink sheets. And of course, you can't short sell or enter undefined risk options trades.
Okay.
So our objective criteria involve whether exchanges list these securities.
Thank you. And I think that probably, I'm sure you'll reevaluate that after these effects. Let me turn to Ms. Schulp. Thank you for being here. The Wall Street Bets Reddit platform. I'm curious, when you think about the obligation of this SEC pending investigation, based on your FINRA background, do you think the SEC should look at the bulletin board participants under Section 9A2 on potentially inducing trading in a certain direction? Is that worthy of their review?
Thank you for the question, Congressman. I think that there's been little evidence to this time that there's been any sort of false or deceptive conduct taking place on the Wall Street Bets Forum. That does not mean, though, that I think that the SEC should not take a deeper look. Because of the anonymity in the forum, there could have been people that were engaging in deceptive behavior that's not readily apparent to outside to the public. So I do think the SEC should look, but to this point, I've seen very little that would meet a test for manipulation, which generally involves false or deceptive behavior.
Thank you. I appreciate that. Mr. Tiev, I thought of another question for you. Would a securities transaction tax be beneficial to retail investors in the United States?
Thank you, Congressman. I don't believe it would.
Thank you.
Gentleman's time has expired.
Thank you, Madam Chair. You're back.
Witnesses, we will take a short recess. The committee stands in recess for 5 minutes. Thank you.